Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be discussing the risk metric. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, it's probably been a few months since I last provided an update to the Bitcoin risk metric. It just didn't seem that useful to keep saying the same thing because the price of Bitcoin was essentially range bound for about 7 to 8 months. So, not a whole lot was really going on in that regard. But the risk metric, I think, is a pretty useful way to navigate Bitcoin. Now, again, nothing's perfect. And at the end of the day, all models are wrong, some are useful. And I just happen to find this model more useful than a lot of the other models. And the reason why is because as an investor, it's easy to look around and buy when there's a lot of greed, and it's easy to sell when there's a lot of fear. But the way to be successful in the cryptoverse is to have a plan and stick to it no matter what, right? Whatever you see in the news, whatever you think is going to happen, right? None of that ultimately matters in my view. It's all about what is the risk associated with the current Bitcoin price. And if you give me that number, then I can do something with it, right? For instance, the risk metric goes from 0 to 1, right? So when it's 0, or let's say when it's close to 0, between say 0 to 0.2, it tends to be a pretty good accumulation opportunity whenever it happens, right? 0 to zero point 0.2. And that's sort of the blue dots, right? So we can isolate just 0 to zero point 0.2. It tends to be a pretty good accumulation opportunity whenever it arises. Now, throughout the years, you can see that historically it arises sort of near the end of the midterm year, the midterms. That's when it normally goes into those levels, and often the early phase of the post or the pre-halving year, right? The early phase of the pre-halving year, you'll see it'll also be around those levels. Last cycle, we actually went into that level, into that zone in the halving year because we had the pandemic induced recession. So this is one of those things where no one really knows exactly when it's going to happen. There's certainly precedent to say, well, it tends to at least happen at the end of midterm years, but there's also some evidence to show that it can happen at other times as well. So it's one of those things where no one knows exactly when the risk of Bitcoin will go below zero point 0.2, but whenever it does, it tends to be a good time to accumulate Bitcoin as long as you have a multi-year time frame in mind. Um, so for instance, this last cycle, you know, just to tell you what I did, first of all, I sold basically, all of my altcoins to Bitcoin back up here in Q1 of 2022. By that point, I had come to terms with the fact that we were entering into a bear market, and I didn't know exactly how low we would go, but I thought that, eventually Bitcoin would get to new all-time highs before most of the altcoin market, and I also thought that Bitcoin dominance would go on a pretty long journey to the 60% milestone, which today it's at, and of course it could go potentially above 60%. But then I did not start buying Bitcoin with US dollars until July of 2022, when Bitcoin collapsed to less than the zero point 0.2 risk level, right? And I put in a few buys, a few limit orders, they got filled, and then it went lower again in November, and then those got filled too. Now, sometimes I look back at this stuff, and there's always two feelings you get in the cryptoverse. It's either I wish I had bought more, or crap, I bought too much, right? And the I wish I bought more normally happens eventually when you look back at the 0 to zero point 0.2 risk range, right? The 0 to zero point 0.2 risk bands. And I look back and I bought, right? And I published those buys to ITC Premium, But I always look back and say, yeah, of course I could have bought more. That's a better feeling, honestly, than buying tops and then looking back and being like, crap, like, I wish I hadn't bought so much. Which that brings us to sort of the next point is when Bitcoin goes to the point 0.8 to 1 risk bands. So whenever Bitcoin goes to those risk bands, it tends to be a pretty good idea to scale out of the market. Now, that doesn't mean that Bitcoin can't eventually go higher. As you can see in 2013, we went to the 0.8 to 1 wristbands. We cooled off and then we went up there again. But when the market cooled off, it might not look like it, but the price to Bitcoin during that drop was like 80% or something. It might have even been more than that. And essentially, every single time that the risk of Bitcoin goes to the 0.8 to 1 wristbands, within the next, say, 6 to 12 months, Bitcoin tends to drop somewhere between like 70 to 85 to 90%. When Bitcoin was younger, it was more so dropping 90%. And then here it was like 87. And then here it was 84. And then I think last cycle it was 77. So, in the same way that you get diminishing returns, you also see diminishing losses, which is a good thing. I mean, as it goes on, the volatility does start to shrink, which in some ways is not good for people that want to get cheaper valuations, but in other ways, for hodlers that just want to keep DCAing, right? You don't want to see your portfolio drop 80% every 4 years. So perhaps it would be a good thing if that didn't have to happen every 4 years. But there will likely be drops like that in the future. And so it's important to recognize that whenever that happens, it's probably time to start running for the hills, right? Now, the risk on Bitcoin right now is right around 0.6. Okay, so it's in kind of that intermediate zone where it's hard to say, right? It's sort of like it could go out, it could do either, right? I mean, there's times where, like in 2019, where Bitcoin only goes up to sort of the 0.6 risk level. I think it actually went up to like 0.685 if you look at some of the intraday wicks. And if you look at where Bitcoin went in March of this year, it actually went up to the 0.7 to 0.8 risk band. And back then, I remember telling people that this would likely be a mid-cycle top. Not because, and I didn't say a market cycle top, I said a mid-cycle top. Because gold was breaking out, USDT dominance was hitting its long-term trend line, and I got your guys' messages. I know it's there again. I don't need 100 more. I got 100 today and 100 yesterday. I don't need to keep hearing it. I understand, right? But that was the reason, right? I mean, we looked at it and said, all right, well, it's hit 0.7 to 0.8 risk. Gold's breaking out. USDT dominance is at its trend line. It's probably going to be a mid-cycle top. So not every rally by Bitcoin goes to the 0.8 to 1 wristbands, right? Not every rally does. And that's the reason why sometimes it can make sense to sort of dynamically sell out as the risk bands go up, right? So what a lot of people would want to do, if we go look at the risk levels like this, where we take sort of the color code out of it and just look at the single metric, what a lot of people want to do, which is not necessarily a bad strategy as long as you have a long enough time frame in mind, is that they only sell whenever Bitcoin goes to the 0.8 to 1 wristbands. Everything that happens in between this spike and this spike is completely irrelevant, right? It does not matter. Whenever this spike occurs, you wait until it goes back to lower risk levels, and then you buy, and you just wait for it to go back up to that wristband eventually. And eventually, it typically does. But if you want to take advantage of some of sort of the market, sort of the moves within the cycle, you do occasionally get tops like this, where it looks like it might go up to the 0.8 to 1 wristband. It's rallying a lot, but then it just kind of fades before it gets there. And so what I did in 2019 was I sold some when it went to the 0.6 to 0.7 wristband, but it wasn't a lot, right? it was only approximately, I think, like 1/10 of my Bitcoin position back then. And it might have been a little bit more. I can't remember exactly, but it was around that amount. And I remember thinking when I sold it, I was like, why am I doing this? I mean, it just seems like Bitcoin should be able to go a lot higher. But then 9 months later, I felt like a genius when Bitcoin was trading at $3,800. And then I was able to, that 10% that I sold was then able to get just that 10% was able to get, 3 to 4 times the amount of Bitcoin by just sitting and waiting for that move. Now, the reality is I didn't wait until $3,800 to sort of redeploy. I started redeploying after it went back below the 0.5 risk level, right? So that's essentially what I did. Um, and that works out pretty well, right? DCAing below the 0.5 risk level. If you're more conservative, you could say DCA below the 0.4 risk level. If you're even more conservative, you could DCA below, say, like the 0.2 risk level, or lump sum, if you will, right? So lump sum anytime it's below 0.2, and then forget about it, go enjoy your life, and then check back in whenever it's, back above 0.8. If we are being honest, that's probably one of the better strategies, right? Whenever it goes down to those risk levels, lump sum, and then forget about it. But practically speaking, you know, you bring in money every single month. You don't always have the luxury to just lump sum everything at the market cycle bottom. But that also doesn't mean that you should miss out on every move after that because you didn't buy at those risk levels. And so it can make sense to sort of DCA up to higher risk levels, right? You could say up to 0.4, up to 0.5. Some people DCA up to 0.6. A common question I get from people is, well, what if you're new and you don't have a Bitcoin position and, the risk is already high? My sort of go-to response to that is that you can always DCA if you don't have any Bitcoin, um, even if the risk level is higher than what you otherwise would. And then in subsequent years, you then only start to DCA. You sort of lower your range that you're willing to DCA in. So, you know, and also I would think, if you're going to use a strategy like this, it makes sense to DCA up to a certain level and then sort of have a gray region where you neither buy nor sell, right? So that way you're not like flip-flopping every couple of weeks because you don't really want to necessarily deal with the tax implications of something like that. So let's say you only bought Bitcoin up to 0.4 risk and then you only sold it above 0.6 or something. That way, you know, when it's between these levels, you're not doing anything but just sitting on your hands and waiting for the next move. So, what I've learned with Bitcoin, and you've probably noticed this if you've followed me long enough, is that I certainly can't predict where the market's going to go. My best predictions are typically related to sort of things like the Satoshi valuation of altcoins, where Bitcoin dominance is going to go. That stuff seems a lot more predictable to me. The altcoin USD valuations are a lot more difficult to predict because they're more dependent on Bitcoin. And a lot of them, even when Bitcoin goes up, altcoin USD pairs can go down. So altcoin USD pairs, alt USD pairs are really difficult to predict, but alt Bitcoin pairs are a lot easier to predict. A lot of times, the real alt season that people want doesn't begin until Bitcoin reaches some of the higher risk levels. That doesn't mean alts can't go up on their USD pairs. It just means that they're likely bleeding on their Bitcoin pairs. And because Bitcoin is a lower risk cryptocurrency than the other ones, it makes a lot of sense to just remain Bitcoin heavy until Bitcoin hits some of those higher risk levels. That doesn't mean you shouldn't be diversified at all. It doesn't mean that, it doesn't mean that you're a Bitcoin maxi by just staying Bitcoin heavy. Doesn't mean that you're not, but it just means that you respect what the market is telling you, and the market tells you to be Bitcoin heavy until certain conditions are met. And some of those conditions could just be the risk levels. I talk a lot about sort of the transition from quantitative tightening to quantitative easing being something that, that could have, that could play a role. But there's a lot of things, in that affect the market. I think for me, while I talk about this stuff on a daily basis, and I talk about dubious speculation, and I talk about, what I think might happen, right? I think there might be like in March, when I said I think there might be sort of a 6 to 9 month lull in the market where not a lot of stuff happens. It's all just dubious speculation at the end of the day, right? I'm not trading those ideas because I recognize that I could be wrong. Um, and I'm not willing to sort of risk the health of my portfolio just based on what I think, based on dubious speculation from the charts, right? I'd rather stick to something a little bit more concrete, right? A little bit more quantitative that takes the emotions out of it. And that's what I think a risk metric like this accomplishes. So we do have this on the ITC website. There is a sale on ITC Premium if you want it. But I will say this again, and I don't just say it for the sake of saying it. I mean it. There is a free tier on ITC. I don't think it has this, but it's got a lot of other things. Um, you know, there's plenty of risk metrics you can use, right? You don't have to use this one. It's not that difficult to create sort of approximations of stuff like this. Okay? So, I would encourage you to look around for things that you could use. It doesn't have to be this. This is just what I use, right? But it's not perfect either. It's not perfect. It's what I use. And furthermore, if it's really only meant for larger portfolios in general. It's like if the subscription amount significantly eats into what you're DCAing into the market, you're probably just better off DCAing anyways and ignoring the risk metrics. So that is, that's sort of my long-term view of how to navigate Bitcoin. This is just what I use. And it's not perfect, but it's done a good enough job for me. Last cycle, I bought down here. I sold like 1/10 up here. I bought again down here. I went really in March of 2020. I was not expecting that drop. I think I went to sleep and the price of Bitcoin was like 7 or 8K, and I woke up and it was at like 3,800. And I mean, I literally didn't even believe it. I thought something was wrong with my app that I was using to track the price. I'm like, there's no way. I mean, Bitcoin was $8,000 when I went to sleep. How the hell could it be $4,000? It didn't make sense. But that's the beauty of stuff like this. It does not require you to predict where the market's going to go, right? I don't have to know where the market's going to go to have a strategy to navigate said market. All I have to know is when it goes below a certain risk level, I buy, and when it goes above a certain risk level, I sell. So if it goes low enough, I'm DCAing. If it goes high enough, I'm selling, and that's it. That's it. Earlier this year, I did sell some because it went to the 0.7 to 0.8 wristband, right? I sold some, and I don't apologize for it because you can see that the price of Bitcoin then sold off, right, to 49K, right? It had a pretty big drop, and this doesn't even completely reflect the drop that it had, because this just shows you sort of the daily close, but the risk actually went a lot lower than 0.45 when you look at the intraday wick. So this is one of those things where at the end of the day, I think it's better to have a plan and stick with it than try to time the market based on what the news is suggesting is going to happen, or furthermore, what I suggest is going to happen. Because I'm not perfect. I get a lot of things wrong. And what I've said, and I really do mean it, I'm not just saying it. I would rather be rich and wrong than poor and right, right? I'd rather make predictions that don't come true and get rich because the market is going up further than I thought it was than to not have a position and be right, right? I'd rather be rich and wrong than poor and right. There's this sort of, you know, toxicity that exists in the cryptoverse, where there's a lot of different analysts and everyone's sort of jockeying to claim who's the most right about stuff, right? And when someone gets something wrong, everyone wants to go dunk on that person, right? Everyone wants to go dunk. And For instance, like recently, I thought that ETH was gonna go home, and it didn't, right? I mean, it rallied instead, and I hedged and I bought some ETH, a few weeks ago before the rally, and of course, I tell people that I bought, but I did have a theory that I thought it was going to go home, and which is the lower logarithmic regression trend line, and then it didn't. So I had people dunking on me, which is fine. That's just part of the game, and you sort of learn to accept it. But it's also one of those things where like I don't mind all the time being dunked on when I'm wrong, as long as I hedged myself and made money along the way, right? So it's fine to be rich and wrong. That's a lot better. It's a lot better to sort of put your dignity aside, because at the end of the day, we're here to make money. We're not here to be right, you know? If you want to be right, go to grad school or something. I did that, right? I did that for 5 years, um and here I am, right? So, being right is one thing. And being right about this kind of stuff at the end of the day is not going to matter. It's more about, you know, how do you manage your portfolio? Are you throwing all your money into stuff that's just bleeding against Bitcoin? Or are you sticking with the king in a Bitcoin dominance uptrend? That doesn't mean Bitcoin can't go down. It just means that whenever it does go down, it generally presents a good opportunity, right? There's nothing wrong with that. I mean, if you think about it, if you go to a store, you like it when things are on sale, right? You're more likely to buy it if it's on sale. If it's not on sale, maybe you wouldn't. But if it is, then you're more likely to buy it. But in the cryptoverse, if things are on sale, people freak out, right? They freak out. They get really worried about what's going on in the market, and they don't want to buy when things are on sale. So what I would say in general is that the risk metric, I think, is really useful for helping to take emotions out of it. And it's not the only thing that you can use to do it. There's other things you can use as well, but it is really helpful. The one thing I will say is that, while it does tend to go to the 0.8 to 1 wristband every few years, it doesn't spend a lot of time there. So if you were to go look at the time in the wristbands, right? So you remember earlier this year when we went to the 0.7 to 0.8 wristband? If you go to time in wristbands, you can see for all cycles that in terms of percentage of the time, Bitcoin only spends about 2.77% of the time in the 0.7 to 0.8 wristband. So that was another reason why back in March, I offloaded some a little bit, because I'm like, well, I mean, it's not going to spend that much time in these wristbands before it goes back down. And, it gets even less for the 0.8 to 0.9, only 1.5% of the time, 0.9 to 1, only 0.35% of the time. So in terms of days, out of all the number of days that Bitcoin has been around, Bitcoin has been in the 0.9 to 1 wristband exactly 18 days. 18 days. So it's one of those things that whenever it does happen, it makes sense to take action because it's not going to be around forever. Now, I don't know when the next time Bitcoin will go to the 0.8 to 1 wristbands, right? I don't know. I mean, it could be as early as this month. It could be as early as January or December. It might take until April. There's a chance it takes until a year from now, right? No one actually knows. But you don't have to know. You don't have to know, right? It's just when it happens, you make your move, right? And when it goes down here, you make your move. And what happens in between is somewhat irrelevant and more so based on your own risk tolerance. Most people in the cryptoverse, even the more conservative people, are going to be buying at below 0.2 risk and probably selling above 0.8. What happens in between there is more subject to your own risk tolerance, right? And there's not a right or wrong answer. There's not. Sometimes I'll see people say like they sold at I remember like last cycle, some people sold at like 40K and 50K, and and then people were dunking on them and laughing at them and saying, "Oh, you're missing out. Bitcoin's going to go to 300K and you just sold everything at 50K." I remember selling a lot of mine at 58K because that's when it hit the 0.901 wristband last cycle at 58K back in like February 2021, and then it went slightly higher in March and April, but only a few $1,000s higher. And every time it went higher, I was getting dunked on because like, well, you sold at like 58K and now it's going to go to 300K. But then you look back and you're like, selling at 58K when that April top ended up being 64K wasn't really that bad because within a few months it was back at 29K. So there's not a right or wrong answer. There's just what is your risk tolerance, and remembering that crypto is a personal journey. It's not a journey that we're all doing, and following the same strategy together. It's a personal journey. What is right for you is not going to be right for someone else. Sometimes I see people say they sold their Bitcoin to go pay off, their house or to sort of pay off a bad debt that they have or something like that. And hopefully it's not because they're paying off one with like a 2.5% mortgage rate, right? But it's one of those things where the what's right for them is not what's right for you. And oftentimes when people do that, it gives them more freedom so that in the future they can allocate more capital towards it, right? As their cash flow comes in. So that's the beauty of the cryptoverse over the long term, right? Over the long term. So that is the Bitcoin risk metric. Again, current risk is right around 0.6. I mean, it's right now it's 0.591, but it's just kind of oscillating around that 0.6 level as the price of Bitcoin continues to sort of slowly oscillate. But we'll sort of check back in with this stuff and see where it goes. But again, thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. See you guys next time. Bye.